Hi guys, it's Dale with the insurance. Today we're going to talk about an aspect that crosses all insurance verticals. Um, Generally, it's frowned upon, but for some people, it is adequate, and for some insurance verticals, it's used quite often. Actually, the title of the article is "Can I buy multiple insurance policies for the same risk?" Right? So typically, um, people purchase insurance begrudgingly, and they do it when it's required, right? So your auto, your home, your health insurance. However, there are some folks out there that really want peace of mind, and are looking for multiple policies either to kind of address a coverage gap or to amplify coverage, right? So they're not comfortable with the limits they currently have, so they want to increase those limits with an additional policy. And you can imagine, generally, this is something that the carriers scrutinize heavily, right? Because carriers are looking to protect themselves against fraud all the time, right? And multiple policies typically reeks of kind of a moral hazard, right? The idea that somebody is trying to enrich themselves by having multiple policies, right? So a rule of thumb for carriers are you can't benefit from a loss, right? You can't profit from a loss. That obviously presents a moral hazard whereby you aren't really doing everything you can to protect the asset, right? Which becomes risky for the carrier. So let's actually look at some of the insurance verticals to see how this may play in. So if you take a look at auto insurance, generally not accepted to have duplicate insurance, right? But there are instances when it's acceptable, right? So one of those instances is typically if you're buying a car, right? The dealership may have kind of temporary on lot or off lot type of insurance, right? There may be a time where you're gaining ownership of the vehicle whereby that temporary insurance overlaps with your insurance kicking in for your new purchase, right? And that's fine. In those situations, carriers will kind of look at their insured's insurable interest and pay the portion of the claim which they feel represents their insured's insurable interest. Another vertical, health, right? Generally not accepted because you can't double dip, right? For double dip, quote unquote, for the same loss. That's illegal. However, there are some times where multiple policies is acceptable. One example of this is a child who's under 26 may be covered under their parents' policy, may be also covered under their own employer's policy, right? In such circumstances, the carriers will kind of huddle up and ascertain who has primary and who has secondary coverage, right? Another vertical, life. Life is interesting because it's kind of the one insurance vertical where it's actively used, right? So buying multiple life insurance policies is actually a strategy that's used. It's called stacking. So for instance, let's say you buy you buy $500,000 of temporary life insurance for 10 years, and then you buy kind of 300,000 for 20 years, then you buy 100,000 for 30 years, right? In lieu of buying just a whole life policy, right? So you may end up over the term of the policy paying less and having appropriate coverage at different times of your life, right? So at the beginning part of that 30-year term, you have as much as 800,000, right? In the example I gave. On the latter end of that 30-year term, you have 100,000. right? Which is fine because your liabilities aren't as high as they were when you were kind of 20, 30 years old, right? The next one is home. It's once again, there are times where multiple policies are accepted, and typically with home insurance, that's often to address a coverage gap, right? Just because home policies have several exclusions, flood being the most common. You may take out another policy that covers flood, just so you can match your two policies up so that you're completely covered for your property. The last vertical, business insurance, is the one that it almost doesn't make sense to buy multiple policies because business insurance is so intricate. As you know, each business is completely different. And not like, hey, I've got a Honda versus a Ferrari. Just completely different risks, right? Like a manufacturing company versus a lawyer's office. You know, those are different, completely different risks, different day-to-day risk, and you need different coverage for it. So if you're buying multiple policies, multiple business insurance policies, there's a chance you may create exposure that you never had, right? Because these policies are written specifically to an industry, and if you try to match another one up, there may be holes because those two policies don't align perfectly, right? Like in our prior example, home, if you have kind of home coverage, standard coverage is pretty uniform. If you have flood excluded, you buy a flood policy, though they generally will align perfectly. It's not the same for business insurance. So hopefully if you are looking at multiple policies, good on you. Just make sure that you're doing it for the right reasons. As I stated before, it's highly scrutinized. But there are some instances within different insurance verticals where it does make sense. Thanks for stopping by, guys, and we'll talk to you next week.